Hello and welcome to this short video where I'll talk for a few markets to keep an eyes on in the coming days. So first off, we'll start with the pound. The Brexit is once more dominating news, and we're expecting to see possibly a couple of votes in the UK House of Commons this week, with first some indicative votes suggesting what Parliament would like to do and what process they'd like to go forward to, and possibly also a third meaningful vote on Theresa May's Brexit deal. Now, in terms of the pound, if we just take a step back and look at what's happening, you can see going all the way back to 2016 when we had that major decline on the EU referendum. The market was trading around 150 and we've not really got back up to those levels since. Most of this year we have been in a rising uptrend here, you can see shown by this trend line, but the price is still failing to break above potential resistance around 133.20 to 133.50. If we do get a pound positive outcome and the market can break above here, then the outlook improves and we could see further gains. However, if we do get a negative reaction in the pound and it breaks below this trend line, then we could be in for a retest of prior support around 129.60. Another pound pair which is quite interesting is the pound Japanese yen. You can see here we had quite a sell-off last week. If you look at the 8 and the 21 EMAs, you can see we've had a negative cross here, which could be seen to signal the start of a downtrend, but obviously the market would have to break below this support region before we could get any further declines, possibly down to as low as 140.120. You can see previously these crosses have indicated changes in trend pretty well, where we got a positive cross here, the market continued higher, and going back to the back end of last year when we got this bearish cross and the market fell significantly lower. It's not just FX. If you look at the stock market, you can see UK 100 cash. We had quite a sell-off on Friday. Friday's session was actually the largest decline we've seen so far this year. And in falling back down lower, the market moved back below the 200-day SMA here, which I've got on in a yellow line. You can see the highs around 7,350 now as possible resistance. And you can also see in that decline we got on Friday, the market returned back below 7,260, which had previously acted as resistance. This is another area to potentially keep an eye on. If we do continue lower, then there may be some support coming in at the lows that we saw earlier this year, back in February and the back end of January, around 7,070. Now, if we do get a particularly negative outcome from the Brexit scenario, such as a no deal, that could be seen as bad news for the pound, but it could also see some movement into safe haven assets such as gold. Gold has been rising in the past week or so. You can see we've got a trend line going back to last November, which has been respected quite nicely. And the market also found buyers stepping in ahead of that 1277 support from where we got around the turn of the year. In terms of levels to look to above, if we do push higher anymore, 1322 could offer resistance, but if price does get back above there, then we could see the market push up near those highest levels of the year, around 1347 once more. Finally, just a quick word on oil. We got a potential reversal signal at the back end of last week. You can see here we've got a sort of evening star pattern forming with these three candlesticks. However, do note that we failed to close on the lows on Friday, so there is still some buying pressure around these levels according to that. You can take a rising trend line from the lows we saw back in December. You can see it's been respected on a few occasions, and once more price is probing here. On the upside, 60.40 is the highest level that we've got since last November, and that's an area to look for potential resistance, and this does actually represent a 42% gain from that low of 42.60 that we saw back in the middle of December. In terms of possible support, if we do break below this rising trend line, then 57.60 could attract some buyers into the market, and if price drops below there, then 55.50 could be an area to watch. You can see this work to support around here for much of February, and it also acted previously as resistance and a possible neckline in a big longer term inverse head and shoulders setup.